Welcome back to the Finance Shark, where we break down all things real estate, investing, and financial freedom. Today, we're diving into a topic that every aspiring real estate investor needs to understand: the real costs of owning a rental property. Spoiler alert, it's not just about the mortgage payment. Let's get into the nitty-gritty so you can go into your investment journey fully prepared. First up, we have the initial investment costs. Sure, you might know about the down payment, but that's just the start. Let's break it down. 1. Down payment. Most lenders require 20 to 25% down on a rental property. So if you're looking at a $200,000 property, you'll need at least $40,000 to $50,000 up front. 2. Closing costs. Then we have closing costs, which can range from 2 to 5% of the purchase price. This covers things like title insurance, inspections, and legal fees. These aren't small numbers. They could add another $4,000 to $10,000 to your upfront expenses. Or 3. Renovations and repairs. Most properties, especially if you want a good deal, need some work. Renovation costs can range widely depending on the condition of the property. Even small upgrades like fresh paint, new flooring, or fixing leaky pipes can add up fast. Or 4. Reserves for emergencies. One of the most overlooked costs is setting aside reserves. Lenders often require a few months' worth of mortgage payments as cash reserves, just in case. It's money you may not need right away, but it's crucial for unexpected repairs or vacancies. Now, let's talk about the ongoing expenses that come with being a landlord. These are the costs that can eat into your profits month after month. 1. Mortgage payment. This is likely your biggest monthly cost, but it's not the only one. Remember, your mortgage payment typically includes principal and interest, but not always taxes or insurance. 2. Property taxes. Property taxes vary by location, but they can be a significant annual cost. Make sure you budget for these, as they can impact your cash flow more than you might expect. 3. Insurance. Landlord insurance is usually more expensive than homeowner's insurance. It covers liability and property damage, but can be hundreds or even thousands of dollars per year. 4. Maintenance and repairs. Here's a big one. Toilets clog, appliances break, and lawns need mowing. As a rule of thumb, budget 1–2% of the property's value per year for maintenance. For a $200,000 home, that's about $2,000 to $4,000 annually. 5. Property management fees. If you hire a property management company, expect to pay 8 to 12% of your monthly rental income. It might seem costly, but a good property manager can save you a ton of time and headaches. Here's where a lot of new landlords get surprised: the hidden or unexpected costs. These are the expenses you don't always plan for, but definitely need to be prepared to handle. 1. Vacancy periods. There will be times when your property is vacant. Whether it's between tenants or due to a seasonal slowdown, you'll still need to cover your mortgage and other expenses. Aim to keep an emergency fund to handle these gaps. 2. Tenant turnover costs. Every time a tenant moves out, you'll likely have expenses related to cleaning, repairs, and releasing the property. Plus, if you hire someone to find a new tenant, that's another fee. 3. Major repairs or replacements. Sometimes things break. Big things. A new roof, HVAC system, or water heater can cost thousands. Plan for these major expenses by setting aside a percentage of your rental income each month. 4. Legal fees. In the unfortunate event that you need to evict a tenant or handle a dispute, legal fees can add up fast. Evictions can cost anywhere from a few hundred to a few $1,000s, depending on where you live. Okay, so now that you know the real costs, here are some quick tips to help you stay prepared and profitable. Budget for maintenance and repairs. Don't skip this step. The 1–2% rule is a great starting point. Build an emergency fund. Aim to have at least 3 to 6 months' worth of expenses set aside just in case. Calculate cash flow carefully. Before buying, make sure you know how much cash flow you'll have after all expenses. A good deal should give you a cushion of positive cash flow. Use smart financing options. Shop around for the best loan terms and consider an interest rate lock if you think rates will rise. Owning a rental property can be a fantastic way to build wealth and generate passive income, but only if you're aware of the costs involved. By planning for these expenses, you can turn a potential headache into a solid investment. Thanks for watching. Don't forget to like, subscribe, and hit the notification bell so you don't miss any more tips. And drop a comment below if you have any questions about owning rentals or the real costs involved.